All right, everyone, welcome back to another one of our weekly videos, our blog vlogs. We are so excited today. We are going to be talking to all of those of you who are preparing to get a mortgage, preparing to refinance, preparing to do anything that is going to require a mortgage application. We've got some great tips and steps to take to make sure you are in the best possible position before you actually apply for that mortgage. So stay tuned to the end. We've got 5 tips plus a little bit of bonus in there. Hi, everyone. I'm Katie Evans, owner and lead agent of the Living 48 real estate team. Welcome back. We're so glad to have you. So before we launch in, as always, thank you so much for watching us. Please do us a huge favor. Go ahead and subscribe to our YouTube channel. Give us a thumbs up, give us a comment, give us a like. And if you find this information really, really great, do us a favor, do your friends a favor, and share this with someone that you know might need this information as well. So thanks in advance for that. Let's launch right in. Today, we are going to be talking about preparing for a mortgage. And these are 5 specific steps that I want you to take before you actually apply for said mortgage. And this also applies if you're going to look at refinancing or a line of credit or some of those kind of things. Anything that has to do with your lending and your ability to borrow against your home. So, it's always an exciting milestone when you're going to buy a house, but it's also a very, very, very significant financial responsibility. We're calling this like adulting 500 level. Okay. So it's a big deal. And before you dive into this world of mortgage, refinancing, all that kind of stuff, there are some really, really solid things that you can do to increase your chances of not only just getting the loan, but getting the most favorable terms on that loan. So there are lots of different rates at which you can get loans depending on what your credit scores are and your cash availability. Like there's a lot of variable in that. And I want you to be able to secure the best possible terms for yourself. So let's jump right in. Let's talk about 5 really, really important things that you can do, 5 steps you can take before actually applying for that mortgage. Okay, the first one I want you to do is I want you to actually access your credit score. Okay, I want you to see what it is. We gotta figure out exactly where we are in the beginning. All right, so there are 3 major credit bureaus. I want you to jump into all 3 of them. I want you to find out exactly where your credit score sits. All right, we are looking to have a credit score of at least 620. Okay, so the higher your credit score, actually the better rates, the better programs, the better terms that you can get on your mortgage. So we want at least a 620. But then we want you to do everything in your power to improve your credit score. Now, what that includes are things like paying your bills on time, reducing your credit card balances, correcting any errors that you find on your credit reports. Those are all going to be really, really, really important things that you can do to improve that credit score. And again, we want at least a 620 credit score. All right. Now, the second step that I want you to take before applying for your mortgage is to reduce existing debt. There is a thing called debt to income ratio, DTI. And we look at that very, very heavily when we are talking about what you can qualify for in a mortgage. We also want you to be able to enjoy your home and live in your home once you get there and not be home poor, house poor. So having your debts reduced and your payments reduced before you go and add an additional payment, even if it's just replacing a housing payment, is going to it's going to be better for you. So reducing that existing debt. Like I said, lenders evaluate that debt to income ratio. That's really, really important to determine your eligibility for a loan at all. So we want you to pay down your existing debts. Credit cards are a huge one. Student loans, car loans, all those kind of things. Consider strategies like the debt snowball. If you're not familiar with the debt snowball, just go do a Google search on that. And they believe it's a Dave Ramsey kind of coined phrase, but it is a great way to reduce your existing debt. All right. This really, really, really is an important thing for you to do. Okay, pro tip here. While reducing your existing debt and improving your credit score, those are two things that actually I want you to go and speak with your mortgage professional first. They are going to actually be able to put together a plan for you that's going to tell you which things are going to have the greatest impact on your credit score, on your DTI, those kind of things. So that's my pro tip for steps number 1 and steps number 2. Be sure to consult with your mortgage professional, your lender, and they can give you kind of the fast track on those 2 items. All right. Step number 3 is going to be save for your down payment and your closing costs. Some mortgage programs will actually offer grant money for 0% down. There's going to be options where a larger down payment can even reduce your monthly payments. If you're putting 20% down, you're going to eliminate your PMI, which is your private mortgage insurance, which of course is going to decrease your monthly payment. So there are lots of options. The more money you have to put down on a house to utilize towards purchasing a house, the better. Ideally, we would love you to have 20% down. Like ideally, that would be rock star status right there. But there are some other programs that will allow you 3% down, 5% down, and any variable in between that and as much as you want down. Okay. And again, remember, there are grant money programs, but those are going to cost you more in your interest rates. You'll have PMI insurance, all that kind of stuff. So make sure that in addition to your down payment, that you have your closing costs. Now, typically those closing costs are going to range you anywhere from 2 to 5% of the purchase price of the home. So sometimes we can ask for those in seller concessions. Sometimes we can't. Ideally, though, you need to be able to forge your home all on your own without any help from anybody else. That is the ideal. Okay. Step number 4, get pre-approved for a mortgage. There's pre-qualification and then there's pre-approval. Pre-approval means that you have submitted more documentation and paperwork and they've checked you more thoroughly to make sure that yes, indeed, they will be able to qualify you for a loan. So pre-approval is what we are searching for. You want to have that pre-approval in your hand before you actually start looking at houses. Why? Well, because if you walk in and you played on some online mortgage calculator and you think, oh, I'm going to be qualified for $500,000 purchase price. I'm feeling comfortable with that. But they didn't include all of the other insurances and other things in that mortgage calculator. And so you've kind of overestimated. And now I, as your agent, take you out to go look at $500,000 properties. But when we talk to the real mortgage professional, we discover that you are actually much more comfortable with a monthly payment on a $450,000 property. The difference between what you can get from $450 to $500 could be substantial. And so I've already shown you these $500,000 houses, and now I'm saying, I'm so sorry, you can't have that. Just feels really mean, and I don't want to do that. So pre-approval is really, really the way to go for your own personal. The other benefit that having the pre-approval over the pre-qualification is that now you have the ability to demonstrate to the sellers that you are qualified. You're ready. You're good. There's less risk on accepting your offer over somebody else's that is only pre-qualified. It gives you a competitive edge in the market that we are in today. So please, 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 if you don't already have a lender for all of these steps, obviously, let us know and we'll help you find a lender that can help you. But we do want a pre-approval before we start looking at properties. All right. My 5th and final step to take before applying for your mortgage is to avoid major financial changes. Oh my goodness. If we had a first commandment of lending, this would be it. Please don't change jobs. You could disqualify yourself right there from being able to get a mortgage payment. Please do not add new credit lines of credit. That affects your credit score. And it could, again, disqualify you from getting a house. Don't make large purchases on a credit card. either before or during the purchase process, because again, that affects your debt to income. It affects your available credit, which affects your credit score. It affects a bunch of different things. So please, 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 please don't be making any big financial moves during this time. And again, if you have to, or if you have a question on anything, we're going to refer you back to your mortgage professional to give you advice on whether or not that is going to hurt you, help you, or even completely disqualify you from the ability to even get a mortgage. All right, you guys. So again, preparing to get a mortgage, there is some strategic steps that you can take to strengthen your ability and even your options within that mortgage. So make sure that you are doing those steps so that you can secure the most favorable financing terms and programs for yourself. My pro tip on every single one of these is to speak with a really, really great mortgage professional. If you do not already have one, we have several that we work with. We would love to refer you to them. You will have a fantastic experience with them. Let us know and we will get you in touch with them. My final pro tip is it is never too early to start having a conversation with a mortgage professional if this is in your future plans. 6 months, 1 year, 5 years, it is never too early. Let's go ahead and get you with someone that can start walking you through the process to help you get in the best possible financial positioning to make this mortgage experience fantastic for yourself. So as always, we want to thank you for watching this video. If you have any questions, we are here to be your residential real estate resource. Please reach out to us and we would love to help you with any of your Arizona real estate needs. Thanks again. We'll catch you on our next video.